All right. Good morning to those of you arriving early. Well, I guess right on time, which is early because we typically start after a little grace period. Good morning. You should be seeing my screen. Let's see. And let me get some chat so I can see what's going on. And you can chat to everyone. Okay. Perfect. Looks good. Thank you, Clint. Good to see you. Hello, Clayton. Good morning. Let me just make sure I'm ready for the recording. Yes. Ready for the posture. Yes. Okay. Definitely an interesting week. And it'll be right. We went into last week with 1 week only of stability in our posture, stabilizing at a bullish score. So there's always that hope that the bullishness of the market prevails. Um, that was the hope, and that we would maybe even have some trades start to manifest. Well, that wasn't what we got. So now we get to assess what we got. I do still like Sundays the best of all. I think this is actually it's interesting because I try to just as I ask, how's everyone doing? What are you doing? How much are you doing? How many positions? Right? I just sort of try to as we move into these markets, and it was interesting because having been on a holiday for a good, that initial pop, I had to come back almost reactively, get a sense of it. But I feel like, and I would like, certainly confirmation. I feel like, of course, losses were taken. I mean, it's not like, oh, did you lose some money? Well, look, the market, it went into a choppy 5% as of now, 5% consolidation. Consolidation. It'll be interesting because, and I know I'm just kind of yapping here, but I'm going to give it 2 more minutes and then we'll start the recording to see who else pops in. But it'll be interesting to see. I saw an article on Yahoo that talked about and they put an adverb in front of it. I can't remember what it was, a big or a deep or something correction. It's just like, well, correction is just a correction. Technically, that's a technical term. 10% from the highs. It's corrected at that point, right? Bear markets. It's not like it's this mysterious thing is this a bear market? If it hits 20% from its high, that's a bear market. It's not, right? Now, recessions are a little more mysterious. They eventually have to be confirmed by the the board, the esteemed board of declaration. But anyways, all right. 1 more minute and we'll get going. So I think it'll be interesting if that article's still there because yeah, look, we drew where a correction, the 10%, we drew where it would be. So we know what it looks like. We know, right? We want to have a sense. What would that look like if we did end up hitting 10%? Because that feels like there would be bearish trading potential there. And I agree 100%. That's why we wanted to map that out. What would it be? One move, two moves? Yeah, it could happen in one more move, or it could take two to get there. Okay, glad I waited. I got a few more people in. Good to see everybody that just joined. Yeah, let's hit it. I'm starting. Okay, officially. Good morning, everybody. Happy Sunday. Welcome out to the Market Watch Group. Weekly market prep. I'm actually changing the name. I think it's Sunday Market Insights or something. I'm going to get my slides up to date this week, ideally. My name is Scott. For those listening on the recordings, I hope you start carving time to come to the live sessions. They are better when we get lively discussions and multiple perspectives. We're more prone to getting insights with some active participation. So I hope you can start to make that part of the benefits you get from using the group. As always, just a quick reminder, education illustrative purposes only. We're not brokers. We're not advisors. We don't give trading advice or investing recommendations. Okay. Good morning, Bob. Good to see you, my friend. What's our agenda? Obviously, first and foremost, the posture. And what's going to happen as we are, trying to make some transitions to the group to continue addressing the amount that we dedicate and orient towards beginning traders and stay with them and keep them feeling like, okay, I can do this. And I say this knowing that I'm the worst of all. I just have a tendency to get excited. I start talking about something, and all of a sudden, we're deep into the Greeks and what you could do, and then a few people are like, "Ooh, this is really interesting," and then most people's eyes glaze over, and they're like, "Oh, this isn't for me." Eventually, I'd like to get everyone to that point, but I recognize we definitely want to keep it in a position so that if you're brand new, you're looking at what we're doing and you're like, yeah, I understand this. It's a little bit over my head, but think I can do this. So that's where we're going. You're going to hear me saying a lot, stopping, checking back and saying, okay, what's the checklist we should do? If I was a beginning trader, if I was new, it's an interesting thing because my holiday took me to the UK. We were in London. We rode the underground. And it was interesting because as you're riding around, there's maps everywhere. There's every stop. They say, this is going to be the next stop. This is the next stop. We're at this stop. And then, right, they always say, mind the gap, mind the door. Right? Every single thing, it's repeated over and over and over again. And for someone like me who, I had ridden it 30 years earlier, but that's great information. I need that every time. I'm like, wait, what stop is this? Are we there? But for people who ride it all the time, you see them, they're just sitting there with their eyes closed. They aren't paying attention. They tune it out. And it's like, okay, I feel like that's what we actually use the train analogy here. I'd like to hear from the group to see if this seems to be on the right track, right? This is a moving train. Part of what we want with this group is the continuity of what we do as traders. We do a little bit of the back end stuff on Sundays for weekly routines, like we do now. We search, we can clean up watch lists, you address your trading logs, and then we immediately transition into trading on Mondays, and we check in on Wednesdays, and we wrap up on Fridays, and we meet in the middle, and there's the continuity because a lot of times like services, you get a trade and then they're like, oh yeah, by the way, we close that. And you're like, wait, what? Did you send a message? And it's just, there's a lot of disconnect. And that's what one of the things that we're trying to do with the group is to not have that disconnect where it feels like that continuity exists. I imagine a place where if someone's like, oh, I took this trade and that they would go and actually post about it in the chat, be like, I took this trade, I'm thinking, man, I'm a little nervous, and see other people in the group respond, and then we pick up and bring that discussion into the live, and we say, yeah, that's what I'm hoping for. Just that's my vision. Just if anyone's wondering, you're like, what's the map look like in your head, Scott? That. um Miguel, I love it. In fact, the I had a friend who said it all the time, but repetition is the mother of all learning, right? That's what I can always hear him saying that over and over again. Um, so yes, uh, I would say that one of my favorites, Bruce Lee, said it a different way. He says, "I don't fear the man who practices 1,000 kicks one time. I fear the man who practiced one kick 1,000 times. Right. So, okay. What are we gonna do today? Market posture. Good morning, Sandy. Good to see you. We'll look at the economic calendar. What do we have? You'll notice that last week bad became good. The unemployment or the labor data, which we have rooted to that for a long time. We really, I'll tell you that I think that the way we look at employment data, labor data, the way we interpret it, the types of patterns that we look for that would flag big concerns has paid off, because that's one of the things that has kept us in a, I mean, if you go back now and you're like, okay, let's look at the last year and a half, you're going to be like, whoo, it was pretty bullish. It was pretty bullish. So what should we have been? We should have been bullish. And if you look back, we were. We literally barely even touched a negative score for a week in the last year and a half. Honestly, you can go, it's very interesting to go back and reflect on that. Good morning, Kevin. 9 weeks in. So hopefully this resonates, because if, you know, I want to make sure that the messaging continues to so that when you're new getting on the train, you're like, okay, yeah, you know, that was a little nerve wracking to make sure we got on the train going the right direction. There was a few of those for us. A few like, ooh, we're on the wrong side. Hurry back the other way, right? And then you get a little bit. By the end, we felt like we were, you know, super comfortable with it. Still nice to hear the person saying what stop you're at, though. So, okay. Sectors. I think sectors are important. Anytime. So our posture has dropped, not significantly, but it's dropped enough that we're like, hey, we hit 5% in consolidation. That could be it, right? That's we may be done as we come out of this. Last week we had good employment information, which made us feel like, oh well, now the Fed's gonna not raise rates. But honestly, we had already been like, it may not be until May, and we were in good company when you looked at the percentages. So we'll look at that today to see if that's shifted even further out, maybe to July. Do I think that that's inhibitive? No, I actually feel like that's okay. Maybe we'll get a surprise cut, but we do get inflation data this week. That's, you know, as far as the economic calendar goes. Yeah. Okay. So right now we're in a consolidation. And we're wondering, is the consolidation over, or is it potentially going to be a consolidation that becomes a correction? Does that consolidation become a correction? Watch list maintenance this week, or excuse me, on Sundays. If it's maintenance, what we're going to do is drop it. That's one of the things that we should be looking for. Do we think we should, if it's a core stock that just is full of liquidity and trades a lot, I'm going to keep it. If it's like a peripheral stock that I added, if I didn't take any trades on it, and now it's like in a corrective mode, yeah, let's bounce those and wait and see if then because when it shakes up and the dust settles from whatever this is, we don't want to hang on to anything that is not still a leader. So if it doesn't show up in our searching as a leader, we're not interested anymore. Stephen, you're right on time. You are right on time. Good morning, and good morning to Steve W. as well. Trading plan section of the week. I think we didn't want it to feel kitschy, like, oh, our New Year's resolution is to be right trading plans. So we focused on the trading plan at the end of the year so that we could focus on execution at the beginning of the year. And I hope that's what's going on, right? Is execution, and then part and parcel of that for me is accountability. So as you're executing, are you holding yourself accountable to the rules in the plan, it's very interesting sometimes where I would take people in one-on-one circumstances and we would look at the plan and then we would evaluate what they're doing and we'd say, okay, scale from 1 to 10. How well did you follow your rules? And they're like, yeah, 6. I'm like, yeah, that's generous, right? 5 for me. So it's not enough to have the plan. We now have to take that plan and we have to compare it to the daily routine. I know Glenn pushes very hard for routine definitions, right? And I'm the same way. I want you to define when, how long, what, and in what order. That's what I like to see. So if we're saying my pre-market routine, which we get to do together on Mondays and Wednesdays, and you get to do with Glenn on Fridays for at least 15 minutes of it, right? So, my pre-market routine would be okay from 7 o'clock to 7:15. That's 15 minutes. When I start right at 7, and I have 15 minutes to do what? And I'm going to have my list. Check the futures, check the news, check the calendar, check your open positions. So I'm going to look at each of them. And what am I looking for? I'm looking for bid ask information that tells me, am I anywhere near where my stops are? Now, of course, I should know that based on the futures. If the futures are flat, I'm not going to be like, oh, am I getting stopped out this morning? No, of course not. I'll be like, okay, my trades are flat, probably going to open flat. I'm still going to check them all to see, are they flat? Are any of them a little lower than the market? Or any of them a little better than the market? And I'm just orienting myself for the day. I can't do anything. Well, that's not true. I can't. If I have a stop that is in danger, I can cancel it so it doesn't trigger, and I will. That's the only thing I'll do pre-market. Then I'll go through my watch list and probably not my full watch list, probably my focus list, which is my full watch list is anywhere from 70 to 100. My focus list is going to be anywhere from 10 to 20, right? Of those that are more in setup mode. That it's like, ooh, if this thing were to turn, that's a trade. And so that's what I'm when we go through the watch list and I'm identifying that focus list that I identify from our watch list is actually I'm putting that into the summary that I post and email out to you. So if you want an easy focus list, just grab that and put that in to what you're doing now. Okay. So back to the trading plan section of the week. I'm not going to do it this week because I'm just kind of reacting. I want to be proactive. So I want to prepare us for it. But I do want to start with like trading plan again, the cycle. That's the loop. My hotel was very close to this. I love my train analogy. My hotel was very close to the circle loop. And it turned out that we were on that so many times. And it was just this loop that went around over and over, around and around. And it kind of went both ways, just looping. So at any given time, you could kind of, oh, that was a great one. And so that's what we're gonna do with a trading plan. It's the trading plan loop. It's it's 8 sections. If you're new, so Kevin, this will be your first full cycle. There definitely will be some people joining you there. You start with section 1 and we talk about it and we will bring it up more in Tuesday, Thursday sessions because it's important to us. So I'll talk to Glenn to make sure that as we are on any given section, we will visit it on Tuesdays and Thursdays in the working sessions and make sure that you're feeling comfortable with that. Making sure you know the resources. There is a fully developed plan. It's interesting because someone asked for like, well, what would be like like a starting plan? And it's, if you ever worked in corporate product, they call it MVP, minimum viable product. Like what do you need to have in place? And I was like, that's actually not a bad idea to kind of be like, look, you shouldn't trade if you haven't got all of that. Like, do you need to have all your trading goals before you start? No. So section 8, I mean, you need section 7 and 8 and, or 6 and 7, that's record keeping and analytics. Like the mechanisms need to be in place for you to trade for sure. Do your routines need to be perfect? No, I think you could just have a starting set of routines for section 5. I would definitely want a pretty strong definition of risk, so I would want section 4 to be pretty fleshed out. One set of trading rules, so one full set of section 3. Um, section 2 is market posture. I mean, if you break it down like that, it's like, you know what? You should have a pretty good plan with one pass at each of this. You should have a pretty strong plan. One as we pass this through. So that's what we're going to work on. MVP is going to be this. So we're going to start next week with that concept. So that will be like, what does it need to be as a bare minimum? And then we can compare that to what does the fully fleshed out plan look like? Oh, I think that's going to be helpful. I'm excited for that. Okay, let's go talk about the market. So, market posture. Right? Sandy says, I think it's important to be in action and you can adjust the plan as you go. So it's kind of like, you work on a plan, right? And you plan it out and then you say, let's go. And then as you go, you're like, well, is this plan right? It makes sense. What's the minimum? And that plan continues to get better, stronger. Mm-hmm. Perfect. Okay. Um, okay, let's look at our posture. I felt like it was going to drop at least a half of a point, maybe more. That was my initial Friday. I can't remember exactly where the weaknesses were. We'll find that out. Everyone who is here now, if you did yours, did it drop? Did it stay the same? If you kind of looked into it, what are your thoughts? Let's get a little conversation going in the chat. Let's start here. This was actually for me the first place. Dropped to 4.5. Okay. I am not surprised. Let's go to weekly. This was my first place because, and you can see probably why, but let's highlight in here. We shifted. We were on the green trend lines and we didn't make it. And then we broke down. But then we're like, we still seem to be on that same angle. So we gave it this grace of a secondary level with blue. And now you'll notice not only did we not hold blue and got back down here to this red line, well, we didn't get to the top of the blue line. So we seem to be, if we were to say, well, we didn't get to the top, you'll notice this new line seems to parallel the red line. I was trying to draw that line, but the drawing tools were a little wonky. Let's see if I can. Yeah, that time I got it to work. I don't know what this is. I think I can delete that. I don't know where that was from. Um, what was this one here? Whoops. I'll delete that one. How does that look? That looks cleaner. And as I look at the measure of this where we are for now, I think that looks right. And so I'm going to adjust here down a quarter point, 1.25. That's what we had been scoring when that red channel way back when was our upward channel. That's what we had scored at 1.25. And here we are back at that point. It's so far all it's done is showed me a slower uptrend. There's nothing been broken, nothing more consequential than that has occurred. Angle is changed. It's a different angle. Is anyone put it lower than mine? Is anyone disagree? What's our number? See if we can get a consensus. I'm at 1.25 now. Okay, let's keep moving. And let's go back to 6-month daily. Okay, now short term. Now short term, this is an interesting one because you know you could come in and say, "Hey, my short term, if I were to draw a line here and connect these dots and connect these dots, that's a minus zero point 0.5." But and I would be like, "Yeah, okay, I could see that." But that's not what I'm going to do. When my short term breaks, that's when I start to say, okay, let's give a point system, right? Where we say, oh, who did what? The reason is because you don't want to whipsaw yourself. Well, I mean, that's the reason is that I don't want to whipsaw myself. I actually, if someone, I'm not gonna actually caution against that. I'm gonna say why I don't. And the reason why I don't is I have in the past, and it didn't work out. I didn't. I mean, there's various reasons and circumstances where it just takes too long for it to get back, and you miss some important action. And we know that there is a an overall orientation that's more bullish than bearish in the market. Provably, statistically, bull markets last longer, occur more frequently. So when I joke about having a magic eight ball, a magic eight ball is a great actual representation. A magic eight ball is inherently bullish. It has more positive answers than negative answers, right? Because it knows people are going to ask questions in a favorable way. Um, so what's the point of that? The point of that is I don't want to have a market posture where I'm inherently bullish and then this thing takes me to negative, because if I'm negative, I'm going to be thinking about bearish trades, and what will happen is you'll end up on 4 or 5 bearish trades, and then all of a sudden the market just boom, just punches forward. Why? Because it's inherently still bullish. You can see it in the VIX, at least for now, right? I mean, when with the VIX under 20, under 18, if that changes, then we of course orient ourselves differently. We adapt as we need to adapt. But as of right now, for me, I'm not going to score what I would actually be able to draw here. All the way back until right in this situation here, we had a very favorable score. The market was bullish. It was moving higher, as we should. Um, Imagine, and here's a great representation of it. Imagine if you had drawn that and you said, that's pretty negative. I'm a -1. And then what did it do? It had this enormous bullish move. That if you were a -1 and you were bearish in that, you would have been like crushed on the wrong side of it, and you would have missed everything on the right side of it. And you wouldn't have had any opportunity to do anything about it until here. And then hopefully then you've adjusted. And it's like, that would have been pretty nasty for you if that's what happened. That's the same thing we're thinking here, right? Is that's how a bullish market is likely to play. And that one actually that one did go at 10%, but even at 10, or no, maybe it was 9. I can't remember now. It didn't quite get there. Okay, so what has happened already, let's just kind of walk through that. We were a 175 and it dropped a half of a point. So in this situation here, that it lost 0.5. Okay, that makes sense to me. So minus 0.5 is marked by that. And you'll notice it went up. It made a lower high. So could we dock it a quarter point for that? Yeah, I would say so. Did we? I think so. Or maybe we didn't. Or at least, if not that one, then that one. even though this low still held. That half of a point's already in play right there. Now, though, what happened? Oh, okay. So I would say minus zero point 0.5 for that, minus 0.25 for that, minus 0.25 for that. Part of this is still me like orienting myself in this with the group since coming back. I would think I would be 1 point off of my score back here. And that's pretty reflective of what the market did. That's I feel comfortable with that. Let me see. Weigh in if you have it. So I think I missed one. Maybe it was last week or the week. Maybe it was here where I didn't take that quarter of a point for a lower high. So I am going to take it now. I'm going to go to a 0.75. I want this to be as accurate as possible. So give me your feedback on that. Do you agree? Do you disagree? Do you feel like I'm being too harsh, not harsh enough? So yeah, if you drew the score, if you drew the channel right now, I think you could say a minus 0.5. I'm at a 0.75. Bob agrees. Sandy agrees. Yeah. Okay. Yeah. I mean, you can kind of go back and see a minus zero point 0.5 initially. It needs a quarter point for the lower high. And now we're given another quarter point for breaking that where we hit that minus zero point 0.5 initially. Okay. I feel pretty comfortable with that. Volume. I think we're going to drop possibly again on volume. We'll see. What do I have 1 month here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 days only in this month? 1 month daily? Okay. Um, yeah. Lots of holidays. Miguel and Clint said it at the same time. You know what it is? I don't like that many expansion days. Okay, that looks a little better at least. You can see what happened. We had to midweek. We added this, um, and we have to duplicate it again, and this as well. I think I'm all caught up. I missed a couple. The group did well in reprimanding me and making sure I got it right. A lot of volume days that we're counting here. Our sanity check just immediately looks not great, but I've got for the sellers, I've got 1, 2, 3, 4, 5, 6. Buyers, I have 1, 2, 3. I've got 2 ties. And if you look at fresher versus staler, first half versus second half, the 3 buying days were in here. And we're like, where are they? We haven't seen them try to make a push at this week. That's something we're definitely looking for, or else we will obviously continue to see our score drop and then would look to speculate to the downside. A lot? No, we're not bearish. It's not a bear market. It's still even just a correcting market. But for me, this is now a minus 0.5. 6 sellers, 3 buyers, 2 ties. That's even more in favor of the sellers. I'm going to drop my score to a minus 0.5. Weigh in. Where are you? What are your thoughts? Oh God, we're already a point down. Sandy, we agree. Yeah, this is definitely now that we have consolidated to that 5% level before we switch into major market and sector rotation. Um, we are at 5%. I think we said it was now, right? I think we said this is 5%. And then if we were to um, go to, I think it was at 530. Let's see. Let me get my calculator. 60907 times 0.9, 548. That's 10%. So that's an additional five beyond the first one. So if we're looking at where does that correction put us if we got a correction, where does that put us? Puts us back here. 548. But let's go look at it from a long term. 548 is actually where the 200, well, it's not the 200 day here. It's the two or the sorry. This is the 50 week moving average. So that would be more like a 250-day equivalent. So you can see it's quite a bit above that. But yeah, if it pulled back to 548, that's certainly a pretty sizable thing. That's what it looks like right there, potentially. Um, so how many moves would it take? This one, two, three, right? With each bearish period being that was about 3 weeks. That was maybe 4 weeks, and that one was 2 weeks. Faster and a little bit more aggressive. Um, and if you look back here, this was even bigger, but it was still one, two, three. Right? Those were longer, shorter, longer, but um, that was more in a bearish market anyway. Okay. Um, Sector rotation, major market, and sector rotation. Okay. Well, let's reload these two. All right. Who's leading? Still technology, still NASDAQ. Down below, we have the Russell, we have the Dow that are basically at the same spot. They moved pretty much in lockstep all back through here, and then around election, small cap got that big jump and it popped. But what's happened? It's given it all back at this point. Um, it's now we're back to that. Okay, is there a race for third? And what can we glean from that? Let's go to 133. More evidence representing what we just said, that the small caps have given back everything they got in this election bump right here. It's all come back down. So here we're pretty lockstep. We're not quite sure. Which is fine. That doesn't change anything. How do you change the line so I can mirror yours? Ooh. I believe I don't. That's a great question. Nope, that didn't do it. um, does the order, are yours in the same order, but they're coming up with different colors? Um, yeah, I don't know. Different order. Yeah, Oh, do you mean here on uh oh, what is going on there? That's crazy. Bob, do you mean on the major market, or do you mean when we're drawing trend lines? I don't know what just happened. Major market. Yeah, that I don't know, unfortunately. I don't know what it's doing either. Like it's doing all this funky stuff. Okay, 133 looks the same. Sorry, we already did that one. Let's go to 66. 66, we have still the technologies leading. What we've seen since October, which is right, this bullishness has been led by technology, and they maintain that strength. With this race for third all the way back to a reset, I don't have any reason to hold, right? This 0.75 is reflective of small caps having a leading position. They don't. It cannot be higher than a point 0.5. If the Nasdaq is pulling us, it can do it, but it can only do it at a point 0.5, right? That's it's sputtering a little bit more when we don't have that extra strength. So I'm dropping mine to a point 0.5. Questions, comments, concerns? Do you agree? Do you disagree? Let me know. Let's look at the 22 just in case, but my score was pretty clear. 22 actually looks a little bit even worse for the Russell. The small caps are really, they're like they were banking on two things: the election and the Fed. And right now the election's fine. There's some transition concerns and policy concerns, but I think the broader question for small caps shifted to the Fed and the fact that if things are strong with jobs, they're really not going to lower that rate again until they see inflation. So now they're going to now everything's tied back to like this week. We haven't looked at it yet, but the economic calendar this week we have PPI and CPI. Okay, sectors. I got to speed up. Now, one thing that's going to happen, I'm going to try next week to do the two parts where we do market posture in 30 minutes and then we do implications, checklists, and it really orients around beginners that if they don't want to watch the market posture internals, they can skip it and just come and watch, what am I going to do with this? So, anyways, we're going to I think that'll be a good shift. Okay, who's leading? Discretionary. That's bullish still. Um, yeah, I do not know what's going on with my can you put it back? There we go. Okay. I hope it doesn't do that on every time frame. Discretionary, utilities for various regions, communication services is bullish, financials is bullish, technology is bullish, and industrial still hanging on. So from this perspective, broad, still overall more bullish than not, but as we start to zoom in, oh, it is like going to do funky things to me the whole time, I think. Okay, 133 all the way to the right. What do I have? Still discretionary strong, financial strong, communication services strong. Utilities is there. Maybe we'll look at and see if there's something for us in utilities this week. Industrials trying to stabilize. There's no shift. This is an all boats analogy. Technology from a sector standpoint is down here, but we know that from a major market is in a great place. Staples is way down, energy is way down, materials is way down, healthcare is way down. All our defensives are still, it's not like we've seen a sector shift. I actually think that the 0.75 is likely to still hold up. It's still bullish from sectors. Is everyone else's stock chart, if you're doing this simultaneously, is yours wonky like mine with these weird pop-ups and banner ads? I don't know what the hell's going on. Discretionary, still bullish. Communication services, still bullish. Financials. So these are still growth sectors in the lead. Technologies right there now as well. So what we have still leading is definitely still growth. I definitely have my score to 0.75. Absolutely. Not going to change that score. 0.22 is just kind of a mess, right? It's a bowl of spaghetti. So there's really nothing for us there. So as far as, still a one. I thought I was a 0.75. But honestly, there is no shift. It's 5 out of 5. Community, all 5 are there. I'm going to leave it a 1. I thought I was a 0.75 and I would have left it at 0.75 and had if I had already dropped it. But in looking at that, there's not any growth sectors that aren't leading, and all of the defensives are in a downward spot. I am actually going to leave mine at a 1. Where did everyone else go? I'm curious. Is anyone 0.75? 0.5? Is anyone still leaving theirs at a 1 like me? Stephen, okay. Stephen is a student of sector rotation. If he's at a 1, I feel pretty good. I feel pretty good. All right. Let's look at the VIX and then let's look at the watch list. Next week's going to be very different because we are going to have a different agenda, a few different things. Make sure you come and provide feedback on how it is. The VIX. What have we done and where are we? We were at a 175. It dropped. Then it dropped again. So you can see the VIX did drop again where the short term didn't. And then it actually moved up. So dropped again, then up. But I think this time we're going to go down again. But let's just go see. So we need to be here. We had a lower high and then a lower high here. But then we did turn. Now, I will say this. I am tisking myself. I made a discretionary call and did not hedge. Well, it was discretionary because I didn't have enough that I'm like felt like I needed to hedge. I only had a little bit left. I'm like, so I didn't. But if I had put it on and let it orient itself towards a more directional, it would be paying off. Would be a good trade. I would be able to be taking some profits on it. So I stop and I think that I let my overall score bias me to that point. I don't know. I'll be reflective of that because now I'm like, oh, I wish I would have had those puts on. And my rules call for it. So it's like, what happened? All right. But we did have a higher low. Now, ideally, this stays in this range and we can come out of this. Right? For now, this is going to be a minus 0.25. If it can stabilize, the best it could do, I mean, it could get this. If you have a same high, and then we break a low to a lower low, I will give that a quarter of a point. But there's not much you can do but just potentially look to trade it if you see it here. So this is where this week, if we see a little bit of stability and buyers start to come in, you're going to say, am I bullish enough that I want to take these trades? How many, where, et cetera, et cetera. That's something you want to be thinking about really now, ideally. Okay, let's see. So my score does drop to a 1. Is a 1 accurate for this? We're still sub 20. We're sub 20. Yes, I have no problem with my score to 1, sub 20. Now, if we break a high, that's going to drop us. If we, so certainly this week is again an important week. This was not great for us. But remember that the journey from 7.25 to 4, that journey of losing 3.25 on our posture equates to a 0.5% drop in the market. 0.5%. If you go back and look, when we actually hit a negative number, it was not last October, but the year before that. It was after a full 10%. So when we get a correction, we would expect our score to be around a 0, maybe slightly negative. But again, that's not bearish yet. Now the question we're asking is, do we have to wait to be negative to trade bearish? Absolutely not. Absolutely not. At this point, now that we lost this and we have this much momentum, I'm definitely looking at that as an open to, if we get bearish setups, I will definitely be thinking about them. And maybe even we'll have an alert that comes out. So questions, comments, concerns, let me know. Bob said he was even thinking about a 0.75 on the VIX. Okay, understood. Yeah, there's some escalation there, and that's all we're doing. We don't need it to be formulaic. We want it to be representative. So if you're like, I see a little more escalation, yeah, then take it down to that 0.75. Absolutely, absolutely. I think that this is pretty appropriate. Sandy says hers is at a 0.75. I think this is pretty appropriate score. Given the conditions, I think that what we see, given what we've seen in the market, makes sense. But we are still a bullish, right? If I was if we had seen the market go from a 1 to a 4, we would be pretty excited putting bullish trades on. In this case, we've gone from a 7 to a 4. So now we're starting to think about downward trades, but I would still be willing to put bullish trades on. How many? A few, not a bunch. I'm not bullish. I'm not as bullish. I'm less bullish. And the momentum is what? Down, right? We thought we got stability last week. Obviously from one to the next, that's not enough. We would have needed it to have gone to a 5.5 again or a 5.75. Then we'd be like, okay, here we go. Now we really expect bullish trades to come. That didn't happen. That's not what the market showed. The market says it's still, the lawnmower is still, if not right over top of us, coming our way. So we're kind of ducking and looking up like, ooh, okay, be careful. Don't stand up. Okay, let's get to the watch list. Took a haircut. Bob got a haircut this week. Love it. Not funny that it happened, but funny how you put it. Okay. Let's close shave. Apple did not get good news out of China. At this point, Apple for me is off the table, which is, it's good that technology is still kind of staying in a leading position because this one is not. Now I'm enough in a consolidation that I'm not looking. Some people will still be like trying to trade if this turns up. For me, it's not. It has to show, right? It would have to pop up because I'm worried it's just going to hit this and then turn, and I need to see it get up to this level, back above the 50, and then I could take the next trade out of that. Amazon, oof, Amazon took a loss there. Took the loss there. Had to, right? Had to. APP, something like that may still be, it's above the 50. It's the sellers after this never really have done much. I would still be considering something like that. AXP, if it can stabilize, one chunk of selling there recovered if it doesn't get to that, if it stays in this level, I would think about that. There's definitely some financials. Bank of America, although we do have earnings coming up soon there, so be careful with that. BK, no. In fact, BK, I'm going to bounce it. Now we need to start cleaning some things off the list. BX, I'm going to leave BX. It didn't have big volume there. It has earnings. We'll see what happens with earnings. Carrier, at this point, Carrier is really on a struggle. I'm going to do a quick vote. What do you think as a group? Steven popped out and back in. Drop, Clint said. The first 3 votes for Carrier. First 3 votes for Carrier. Drop, gone. Love it. That's going to be our mechanism. When we say keep or drop, it's the first 3 votes either way. That's a great fast mechanism. Caterpillar I'm going to keep because I feel like it's one of the, representative of the group. So it's like the group relative to the market groups has stayed okay. I got to tell you, I want to wait until the buyers come back in, but I want to see it. So I can't just drop everything when a group starts to show, right? CLS looks fantastic. Still in a trade on CLS, right? CMG. Okay. Keep or drop. Keep or drop. Boom. It's gone. Sandy wants it gone. Out of our sight. You're off the island. Okay. CNK. I'm gonna leave that one. It's a little below, but it's been pretty mild. That could recover. You can see though, not coherent. I'm gonna drop it. It never really gave a good trade. Cisco. I like Cisco, and I'm still looking for something this week on Cisco. Cisco's got strength. Look at that. Never really flinched much as the market did its thing. Delta, strong, new highs. Got to wait to see what comes next. The Dow is down. DocuSign. I think DocuSign looks fine. That might be a potential trade there. Communication services has been a strong one. Fastenal. Okay. From the industrials. Keep or drop. Keep or drop Fastenal. It fell fast, but it can move fast to the upside. Give it another week, Clint said. Keep it. I'm leaning the same way. I'm the third vote. I say keep. I say keep. Steve was going to maybe drop it because it's below the 50, but yeah, it can get cranking once it moves. So let's keep our eye on that one. I need to reduce the size of this. Okay. Flex. Keep. Look at that. That's setting up for us. Come on. We need some early leaders that are going to pick back up. Bitcoin, maybe. GE Vernova. It's got earnings not too far away, but in a type of a flag right now. Gold. GM. I'm getting iffy. I'm going to keep it for now. Google possibly setting up here. Communication services, strong group. Google market leader. Goldman Sachs earnings coming up here. Earnings coming up on financials means we're also coming up on earnings season. So let's be aware and that's coming up on us as well. Home Depot. I'm putting it on the table. Keep or drop. Home Depot. I'm leaning that way. I'm leaning that way too. I'm second vote. Bob says drop. Scott says drop. Oh, we need one more vote. What are we doing with Home Depot? Who wants to Try to save it. Who wants to be the deciding vote? Drop. Gone. Gone. 3 votes out the door. HWM, still good. Still viable. IBM, floating around the 50. I think it still has some potential. Same thing with IP. Let's keep an eye on those. IWM, obviously, we always watch. JCI. That's not bad for industrials. It's it had that one bad time, but it's holding on. I think that's better. KKR. Oh, KKR. You disappoint me. I'm going to keep it because it's a good representation of regional banks. MasterCard. Ooh, credit is in a downward, but I think we need to keep a good representation of credit. So AXP and MasterCard, I think, fit that bill. Meta looks strong. I think communication services led by Google and Meta definitely are in a good place. Morgan Stanley, still bullish. Microsoft, not great, but obviously we always watch that one. NDAQ. It's in a consolidation. It's a small angle, sitting around the 50. Let's keep an eye on that. Netflix is Netflix. I always watch Netflix. It's on my core list, but it's not looking good. Nvidia, got real exciting at a conference. Gave it all back a couple of days later. PLTR, back to the 50. I'm gonna keep watching this one because I like this stock a lot. But I need this to do this before I'm gonna trade it again. PayPal. Okay, PayPal breaking down pretty hard like that. I don't know. I don't think we need to watch this. It'll show back up later. I'm dropping it. Sometimes I just make executive decisions. QQQ, obviously we watch. Roblox, fantastic. Just looks great. Looks great. Gave a trade. Reddit, great. Setting up right now. Rocket Lab setting up right now. A couple of trades developing in there. So Cisco, Google, Meta, Rocket, these guys look good. SoFi still looks pretty good. TJ Maxx, TJX. I'm gonna keep it. Still sitting around that 50. Could start to pop back up again. T-Mobile, nah. T-Mobile's gone. Too many good ones in the sector for us to watch that. Toast, I think, is still viable to watch. Tesla, we'll keep watching. TSM looks bullish. We'll keep watching, but we do have earnings coming up soon. TTD, I'll keep it. Twilio, I'll keep it. Upwork. It's sitting on the 50. I think we can give it a little bit more, but I'm kind of losing the steam. Bullish dollar regained a little bit of ground here. Here is VRT. Still bullish, possibly setting up. Victoria's Secret, I think it's just on this downward. I mean, we can keep it because it can move quickly when it moves, but it's definitely now in consolidation mode. There's nothing for us till it goes through a full reversal pattern. Walmart, I still like. That gave us actually a pretty good signal. Maybe even a bullish trade on that. And I'm going to skip through the sectors and just go straight to Zillow. I'm dropping Zillow. Just disappointing there. Zillow. Questions, comments, concerns. The opportunity list is smaller. this week. You're going to see a few things on it from tech, from communication services, maybe financials. Other things have recovery to do before we think about trading them. But there we are. Yeah, this is an important week in helping us to understand if we're gonna get some recovery here. Is it going to be a good recovery and we think it's a consolidation that's over? Or do we get a recovery that then starts to reverse and we think, ooh, this thing could be turning into more of a correction? And as I said, there will be more of a look to try to catch it to the downside, if that's what we see develop next. Okay, well, good. It's good to see everybody. I feel oriented. I feel ready to go into next week. What am I looking for? I'll see you guys in the morning. 15 minutes before the market opens, I'll make sure to get our summary posted so you can have the focus list for the week. And as always, happy trading.